the Head of Investment at Interactive Investor, Victoria Scholar. Good to see you again, Victoria. Welcome back to the programme. So this is a pretty impressive performance for Uniqlo, isn't it? How have they done it?
Yeah, absolutely. You know, we've seen that it's raised its annual profit forecast and it's looking at much stronger growth ahead. And I think that's partly because of ongoing expansion in North America when China was in lockdown and its consumers were largely out of action. But also, since China's economic reopening, it has been pursuing expansion there. You mentioned some of the store openings that we've seen, both in terms of Greater China, but also in North America and Europe as well. I think really it's about its low price point, high street, fashionable staple clothes that are really appealing to shoppers who are particularly price sensitive at the moment during the cost of living crisis. The company has said that value is much more important than luxury. And it's interesting when we look at, in comparison, the performance of LVMH and its results, because the luxury company has been struggling, which is in stark contrast in terms of what we're seeing today from Uniqlo.
You mentioned the company's emphasis on value over luxury. Fashion in general, though, is sort of moving away from the fast fashion way of doing things, isn't it? That perhaps cheaper end of the market. Is that going to cause problems for Uniqlo?
Yeah, I think that is certainly something that needs to be honed in on, not just by Uniqlo, but by all fashion companies. You know, we've seen companies like Boohoo.com and others struggle as consumers become a lot more environmentally conscious. We know that secondhand clothing is becoming increasingly popular, and it's all about buying items that are going to endure for the long term. But I do think that one thing that Uniqlo has managed to benefit from is this increase in appetite from consumers for comfortable clothing, which of course was particularly important during the pandemic. But even that is a trend that's managed to endure beyond. With working from home, it looks as though comfort really is the priority when it comes to spending in terms of fashion retail.
So it's got all these very grand expansion plans, 80 more stores a year in China, for example. How risky are those plans to expand so fast?
Well, you're right. You know, China certainly had a bumpier than expected post-COVID recovery. But despite this, its economy has managed to provide a major tailwind to Uniqlo. This is a company that is based in Japan, so it has the added benefit of the weakness of the Japanese yen. That means that overseas revenues in US dollars or euros, when translated back into yen, actually increase in value because those units of foreign currency can buy more Japanese yen. Also, consumers in Japan aren't suffering as much with high interest rates like other consumers in the US and Europe, so they've got a greater propensity to spend. So I think it's really capitalizing on this moment and seizing its chance to try and expand. But like you say, it needs to be a sort of steady as you go strategy, because you wouldn't want to overly expand and then have to end up cutting jobs and closing stores later down the line.
But obviously important for the company not to put all its eggs in one basket. It's got expansion plans in Europe and the United States too. But that said, how important is China to the company?
Well, it does look as though these results, there is quite a lot of focus on China and the growth that it's managed to achieve there. You know, this is the second largest economy in the world. It's clearly a major area for potential expansion for Uniqlo and many, many other businesses. But I think that the bumpy recovery is something that it should be mindful of. But it's just sheer size of potential consumers is what it really wants to try to tap into.
OK, Victoria, good to speak to you. Thank you for joining us, as always, as Victoria Scholar, Head of Investments at Interactive Investor.